In today's show, I'll be sharing the 5 things to watch out for in the Bitcoin market this week, including Ben Armstrong. Feels like Bitcoin preparing to head back below 20,000 soon. Don't get caught off guard. Including this analyst, what does the bottom end for a Bitcoin cycle usually look like? Ironically, I've been here before twice. It looks something like this. The next 12 to 19 weeks are going to be ugly. Once done, the floor for this cycle ought to be in. Then we shall start it all over again. Including Matthew Highland, the Bitcoin structure over the coming weeks/months shouldn't scare you. Either a higher low, double bottom, or cycle low will be formed. The end is near, and Dave the Wave shares $36,000 Bitcoin for Christmas, anyone? And Van Day Pop has a very bullish outlook I'll be sharing with you. Also be sharing the latest from crypto analyst Rec Capital. Also in today's show, the average Bitcoin transaction fee drops under $1 as the network difficulty recovers. That's right, the average transaction fees on the Bitcoin blockchain fell below $1 for the first time in over 2 years, further strengthening its use case as a viable mainstream financial system. Also in today's show, top crypto analyst predicts a brutal Ethereum collapse towards the end of the year and shares his target. Quitting crypto analyst Justin Bennett, unpopular opinion, the ETH bottom is probably closer to $300 than $1,000. Also in today's show, Bitcoin to $300,000 or $10,000. JP Morgan boss warns of something worse than a recession. That's right, Jamie Dimon warned JP Morgan clients that a recession might be on the horizon with a 20 to 30% chance something worse may occur. Meanwhile, Skybridge Capital recently predicted a Bitcoin price rally to $300,000. Also in today's show, the crypto market cap can burst to $200 trillion amid the largest wealth accumulation in history, according to macro guru Raoul Pal. That's right, the former Goldman Sachs executive says an explosion of the crypto market cap by 200x in the next decade is within the realm of possibility. And if you're on the math with the Bitcoin market cap being almost half the entire crypto market cap, we're talking about a 100x Bitcoin price of potentially $2.1 million per BTC. We'll also be taking a look at the overall crypto market. All this, plus so much more, in today's show. Here at Crypto News Alerts, I drop a brand new episode every single day. I also do a $50 Bitcoin giveaway every single day. And the winner from yesterday's episode is Hillinger Personal Training. He wrote, "Thanks JV for delivering great crypto news. Even on Sunday, after we get out of this macroeconomics mess, Bitcoin should be on a path to $1 million by 2030 with obvious volatility to come all the way up. The current prices are a gift for us new adopters that just started in the crypto space in the last year." Well, massive congrats Hillinger. You just won $50 in Bitcoin. Please post your Bitcoin address on the About section of your YouTube channel so I can send it to you. HODL. And to qualify to win $50 in tomorrow's $50 Bitcoin giveaway, just make sure you're subscribed to the channel. Will Smith, that like button, and drop a comment below. And I will hand select a comment as the winner in tomorrow's episode. Best of luck. All right, welcome back to another episode of Crypto News Alerts. I'm your host, JV, and this is podcast episode number 1025. Now for the 5 things to watch out for in the Bitcoin market this week. Number 1, all eyes on Jackson Hole. That's right, the U.S. Federal Reserve is once again in the driving seat this week when it comes to potential macro price triggers for risk assets. Fresh from last week's Federal Open Markets Committee, Fed officials, together with banking figures from around the world, will meet for the annual Jackson Hole Symposium on August 25th through the 27th. Now, this year's gathering comes at a critical time for markets in the U.S. and further afield. Inflation under the Fed's jurisdiction appears to have begun cooling, while elsewhere the opposite story remains true. The latest U.S. inflation data is still weeks away, but that might not stop the Fed Chairman Raoul Pal from giving strong hints as to how the Fed will react, as well as positioning expectations regarding future economic policy. And with that in mind, volatility can easily pick up both before and during the event, making Jackson Hole a key item to watch on traders' radar. Including Kevin Cummings, chief U.S. economist, speaking of Bloomberg, they're so focused on doing this partly because they screwed up last year with the whole transitory thing, and they realized that the one thing they can do now is tighten policy, and that will slow inflation. And with that, it remains to be seen whether the market will shift to favor another 75 basis point funds rate hike in September or gravitate towards a lower 50-point raise. Now, in a previous of its Jackson Hole comments circulating online, the Bank of America said it would continue to look for 50 BP rate hikes in September and November, plus an additional 25 BP rate hike in December. Now, rate hikes in themselves present headwinds for risk assets and in turn provide a challenge for Bitcoin and its bid to escape strong correlation to asset classes such as U.S. equities. Now for the second factor to keep your eyes out on this week at the Bitcoin market. Bitcoin in for ugly 6 months. Bitcoin managed to stave off major volatility over the weekend, but still saw a new low for August as low volume weekend trading conditions accentuated the market moves. And quoting Ben Armstrong, feels like Bitcoin preparing to head back below 20,000 soon. Don't get caught off guard. And quoting crypto analyst Mikhail Van de Popp, probably around the CME Open, we'll be seeing markets drop to 21,200, and that's the close of Friday, and then everything is fine. Still not inclined, we'll be seeing new lows. The overall period of accumulation and heavy correction on Friday causes panic. Pain is on the upside. And zooming out, however, Brian Beamish, founder of Education Suite, The Rational Trader, left social media with no illusions over how the rest of 2022 should shape up for the King Crypto. Quoting him here, what does the bottom in for a Bitcoin cycle usually look like? Ironically, I've been here before twice. It looks something like this. The next 12 to 19 weeks are going to be ugly. Once done, the floor for this cycle ought to be in. Then we shall start it all over again. And quoting crypto analyst Matthew Hyland, the Bitcoin structure over the coming weeks/months shouldn't scare you. Either a higher low, double bottom, or cycle low will be formed. The end is near. Now for the third factor to keep your eyes out on this week in the Bitcoin market, and that's the hash ribbon showing miners out of the capitulation phase. Quoting Charles Edwards from Capriole Investments, hash ribbon buy signal, the Bitcoin miner capitulation has officially ended today, making it the third longest capitulation in history at 71 days. This capitulation zone was longer than 2021 and just 2 days shorter than 2018's, where the price touched $3,100. Historically, Bitcoin's minor capitulations have captured major price lows and been great buy signals. Minor capitulations that occur late cycle, at least 2 years after the halving, and after cycle tops have been the most profitable long-term signals, an example 2012, 2015, and 2018. Now for the fourth factor to keep your eyes out on this week at the Bitcoin market, exchange balances hit new 4-year lows. That's right, price struggles on the shorter time frames have proven to be something of a non-issue for buyers this time around. Behind the scenes, investors, instead of fleeing Bitcoin exposure, have been piling into the market at a noticeable pace in the recent days. According to data from on-chain analytics platform CryptoQuant from August 18th, available Bitcoin on 21 major exchanges dropped from 2,342,000 to 2,300,000 Bitcoin on August 22nd, meaning in 4 days, exchange users thus removed 30,000 Bitcoin from their accounts. And fellow data from Glassnode Analytics meanwhile added that the current combined balances across the exchanges it monitors hit a fresh 4-year low on August 22nd. And for comparison, in August 2018, Bitcoin was climbing towards $7,000, but still several months out from its bear market bottom of $3,100. Now for the fifth and final factor to keep your eyes out on this week in the Bitcoin market, sentiment gauge drops 40% in a week. As you can see here in the Crypto Greed and Fear Index, we're currently rated a 29 out of 100 in fear. Yesterday was a 27, last week a 45, and last month a 31 in fear. So even as the exchanges see an acceleration in Bitcoin leaving their books, the overall picture is now firmly one of fear when it comes to Bitcoin and altcoin investors. And quoting Dave the Wave, $36,000 Bitcoin for Christmas, anyone? Of course, there is no wiggle room on the short-term trend line on that chart. Could also allow for the comparative 0.78 retracement, or better yet, the comparative angle. And quoting Rec Capital, in 2015, Bitcoin bottomed 547 days before the halving. In 2018, Bitcoin bottomed 517 days before the halving, discount March 2020 crash. If Bitcoin is going to bottom 517 to 547 days before the upcoming April 2024 halving, then the bottom will occur in Q4 of this year. Now, before I break down next story of the day, the average Bitcoin transaction fee drops under $1 as the network difficulty recovers. But first, let's take a quick look at the overall crypto market. As you can see, it's currently correcting and in the red. We got Bitcoin down 1.3% for the day, maintaining just above $21,200. We have Ether down 4%, maintaining just above $1,500, while Binance Coin, Solana, Polkadot, Avalanche, XRP, and Cardano all correcting and in the red. But all right, now let's break down our next story of the day. The average transaction fees on the Bitcoin blockchain fell below $1 for the first time in over 2 years, further strengthening its use case as a viable mainstream financial system. Let's go. High transaction fees over the blockchain networks work against the users, especially when making low-value transactions. For example, transaction fees over the Ethereum blockchain skyrocketed several times during the NFT hype, inducing stress on general users. You can say that again. While the Bitcoin ecosystem has also endured its fair share of high transaction fees in the past, timely upgrades, including the Lightning Network and Taproot, guaranteed faster and cheaper transactions over time. And as of Monday, the average Bitcoin transaction fees fell down to 82.5 cents, a number last seen on June 13th. 2020, which you can see in this chart. It shows you the fees per transaction from 2020 to 2022. And in addition to the timely upgrades, the drop in transaction fees can be attributed to multiple factors, including falling market prices and lower mining difficulty. However, the difficulty of mining a new Bitcoin block sees a steady recovery as miners gain access to cheaper hardware while recovering from the prolonged chip shortage. And as you can see in this network difficulty chart, August marked the end of the 3-month-long downfall of network difficulty, recovering back to 28.3 trillion from its free fall. Thanks to constant community efforts, the Bitcoin network continues to display telltale signs of a healthy financial system. Although users expect every network upgrade to reduce gas fees and transaction speeds, not all upgrades are built to serve the same purpose, obviously, right? For example, the most anticipated Ethereum upgrade, the merge, will not reduce gas fees. I repeat, the merge will not reduce gas fees. Quoting the Ethereum Foundation here, the merge deprecates the use of proof of work, transitioning to proof of stake for consensus, but does not significantly change any parameters that directly influence network capacity or throughput. So there you have it. The merge upgrade involves joining the existing execution layer of the Ethereum mainnet with the beacon chain, effectively eliminating the need for energy-intensive mining. So there you have it. How many of you are currently bullish about the merge? The tentative release date is September 15th, just around the corner. And before I break down next story of the day, top crypto analyst predicts brutal Ethereum collapse towards the end of the year and shares his target. We're talking about a $300 Ethereum target. But first, let's take a quick look at the overall crypto market cap, maintaining just above that critical $1 trillion milestone with 61 billion in volume in the past 24 hours. The current Bitcoin dominance back on the rise at 40.3%, and the Ether dominance at 19% even. And checking out the top 100 cryptocurrency gainers in the past 24 hours, we have EOS leading the pack, up almost 5% for the day, trading at $1.52, followed by Chili's, up 1.8%, trading just above 19.3 cents, and Synthetics, up 1%, trading at $2.91. And checking out the top 100 cryptocurrency gainers in the past week, you can see a sea of red with just a handful in the green, including EOS, up 18.4%, and Chili's, up 8%. And I already shared with you the Crypto Greed and Fear Index, showing we're currently rated at 29 out of 100 in fear. But all right, now let's break down our next story of the day. A closely tracked crypto strategist is predicting an epic collapse for the leading smart contract platform Ethereum heading into 2023. Popular crypto analyst Justin Bennett tells his 105,000 Twitter followers that he sees Ethereum plunge into a bear market bottom of around $300 as 2022 expires. Quoting him here, unpopular opinion, the ETH bottom is probably closer to $300 than $1,000. That'll never happen, they'll say. It already did during the latest crypto bear market, and that was without a global recession, a bear market for stocks, and inflation ripping to new highs in many developed countries. And El Chardo responded, I don't think crypto has internalized that they haven't seen a real recession, and Justin Bennett is pointing to this comment in agreement. Now, Ethereum is currently trading just about $1,500 at the time of this recording, so a move to Bennett's target suggests a downside risk of about 80% for the top altcoin by market cap. So hypothetically, if that was to happen and Ethereum crashed all the way to $300 and that being the top altcoin in the world, what do you think would happen to the rest of the altcoin market? You can only imagine. Now, as for Bitcoin, Bennett believes Bitcoin is likely headed to lower prices as well after taking out its channel support. As he shares here, this can still turn into a higher low for Bitcoin, but the optics aren't great. I still think we go lower. Let me know if you agree or disagree with the crypto analyst. And Justin Bennett reminds us here is one sign or four that Bitcoin has not bottomed. Measured objectives from left to right. Number one, percentage objective of the double top is 13,500. Number two, January to May bear flag points to 12,000. Number three, May-June flag points to 9,500. And number four, June current flag points to 10,000. Bitcoin has lower to go, in my opinion. Bennett says he expects the US dollar currency index, better known as the DXY, which pins the US dollar against a basket of fiat currencies to continue rising. He notes a rise in DXY does not bode well for both Bitcoin and Ethereum. As he shares here, today's pullback from stocks and crypto was advertised by the DXY reclaim on the 15th. There will always be a canary in the coal mine. The trend is your friend unless it's the DXY 112 to 113 first, but most likely 120 in the next few months. USD up means risk assets down, stocks, crypto, Bitcoin, Ethereum. So there you have it. And before I break down next story of the day, Bitcoin to 300,000 or 10,000. JP Morgan boss warns of something worse than a recession, as well as crypto market cap can burst to $200 trillion amid the largest wealth accumulation in history, according to macro guru Raoul Pal. But first, I want to remind you to smash that show more button right below this video in the description for a detailed analysis of what's going on in the crypto market. This goes for all 1,200 plus videos right here on my YouTube channel. And to qualify to win $50 in tomorrow's $50 Bitcoin giveaway, just make sure you subscribe to the channel. Will Smith that like button and drop a comment below, and a comment will be hand selected on tomorrow's episode. I wish you the best of luck. But all right, now let's break down our next story of the day. JP Morgan's Jamie Dimon, aka Jamie Dimon, warned clients on a conference call of something worse than a recession in the current economy. Dimon believes the likelihood of something worse than an economic slowdown is 20 to 30%. He told clients in a recent conference call that there are storm clouds ahead. This implies, despite the current robust state of the U.S. economy, something worse than a recession is in the cards. Dimon believes the likelihood of a mild recession is 20 to 30%, and a severe recession has similar odds as the Federal Reserve increased interest rates. Quantitative tightening in the macroeconomic outlook points towards something worse than a recession in the U.S. economy. While recessions could slow down the economy, the president of the World Bank is on the same page as Dimon and commented on the high inflation. Quoting him here, the world economy is again in danger. It is facing high inflation and slow growth at the same time. Even if a global recession is averted, the pain of stagflation could persist for several years unless major supply increases are set in motion. So there you have it. Now let's discuss Skybridge Capital's prediction of a $300,000 Bitcoin price. That's right, Anthony Scaramucci, founder and managing partner at global asset management firm Skybridge Capital, has a bullish look on Bitcoin and Ethereum. Scaramucci believes that Bitcoin can rally to $300,000 in the next 12 to 24 months, and the founder explained to investors that the world's largest crypto is set to hit $300,000 in the long term. Therefore, they should relax and stay long term. Quoting him here, the crypto market, it's our belief that most of the leverage is completely out of the system. So you're seeing a very strong recovery. It's a reminder to investors not to pull out, fight their own fear, stay patient, and stay long term. Sage advice. Now Bitcoin is headed to 300,000 or 10,000 next. Let's discuss it. Neko, a crypto analyst and trader, noted that the Bitcoin price has plummeted to 21,700 in the ongoing bearish cycle. This level is key to the Bitcoin price rally, as it's a cumulative average break even of all the Bitcoin holders at $21,700, which is the current Bitcoin realized price, which you can see here in this chart. Now, Bleeding Crypto, synonymous crypto analyst, argues that the Bitcoin price suffers a decline every September, 4 years in a row. It remains to be seen where Bitcoin is headed into September 2022, but this suggests the current bearish run might not be over. And now let's break down our final story of the day. Former Goldman Sachs executive Raoul Pal says an explosion of the crypto market cap by 200x in the next decade is within the realm of possibility. In a new interview with crypto analyst Scott Melker, the macro guru says we can witness an unprecedented accumulation of wealth in the next 10 years. Quoting him here, what I do know is if I just extrapolate the network adoption effects, the number of users, and where the number of users is going to assume it gets to somewhere between 4 and 5 billion in the next 10 years or so, which would be central bank digital currencies, enabling it, all ticketing, a whole bunch of stuff going that way. The market cap of the space goes from $1 trillion to $200 trillion. People don't realize the world has never seen an accumulation of wealth like that in history. This would be the shortest period of time of the largest accumulation of wealth ever seen. Send it. While Powell is extremely bullish on the long-term prospects of crypto, he acknowledges that he could be wrong by a wide margin, as he shares here. Even if I am wrong, let's say I'm a total moron and I'm wrong by 90%, well, that's 20 trillion from 1 trillion. I'll still take that bet because it's still the best bet in the world, and that's by me being wrong by 90%. And he makes a great point. And if we take today's market cap of $1 trillion and we times it by 200x, as per his prediction, we're talking about a $200 trillion market cap and a potential $2.1 million Bitcoin price. Let me know if you agree or disagree with the macro guru. Now for the top 3 comments from yesterday's episode. Thomas Wrights wrote, I hope this channel never ends and keeps spreading happiness. Feeling so inspired and positive after this video. Thanks. Love you, JV. Wishing you good health, wealth, and happiness, fam. Our next featured comment comes from Matthew. Bitcoin will reach $1 million. Just like Satoshi envisioned, it's at least twice as good as gold. Thanks again, JV. You got it, fam. Hodl. And the third and final featured comment comes from Marinos. Thanks, JV. Amazing show as always. $798,000 Bitcoin prediction. Wow. Send it. When we reach that price, we need to schedule a meeting in Florida. Cheers, man. Cheers, fam. And to be featured in tomorrow's episode, drop a comment below. That will automatically qualify you to win $50 in tomorrow's $50 Bitcoin giveaway. I will hand select the best comment. So drop your best comment. Best of luck. And I look forward to seeing you on tomorrow's episode. Peace.